Alright, what's going on, guys? I want to go over this trade breakdown today and why I was short biased this morning. So today we had CPI, I believe, at 8:30, and initially we had this, the fake manipulation drop. There was some hourly SMT. If you look on the hourly time frame, this is kind of what this was looking like. So ES actually took its low here. You can see NQ failed to take this low, so we have bullish SMT. And when this 8 o'clock candle closed, you can see there's a failure swing at this Tuesday high. And so that was the easiest, clearest draw on liquidity. And so that is obviously an important high. And we also have this 8 a.m. failure swing as well, which acts as a pool of liquidity. Now, if we go into the 30-minute chart, you can see on the left side over here, we're in this big fair value gap. And so I was anticipating price to kind of just stall in this area before taking out this 4-hour buy side liquidity. And I was only anticipating price to stall at this area because of ES. And um, I wasn't going to chase longs, right? I wasn't already in after this sweep, etc. So what I wanted to see is if we got any kind of displacement above this Tuesday high and any really willingness to continue higher, right? So once we took out the Tuesday high, you can see on the 1 minute we're not really doing anything. And this is where I was monitoring price at, and this is where we had this area I was already expecting a rejection as we just went over, right? And what was I anticipating for price to go? I was anticipating price to come back into a discount of this range from this swing low to this high, which you can see we created, and target at least this first pool of liquidity, and we eventually did come down and tag this one, but we're inside of that 30-minute fair value gap on both indices, and we get some bearish SMT at the highs. You can see ES makes a new high at 924 when NQ fails to do so, sitting inside of a bearish gap after taking out Tuesday high. And what do we have? We have some displacement here, and if you know what you're looking for, you can use this as your entry right away, right? But on a day after a bullish move like this, I'm just trying to wait for the cleanest and clearest possible setup for my model, right? I don't normally trade changing the state of delivery. I like to add in a fair value gap or an order block retracement. You can see this is where we get our change in the state of delivery from this. This is the biggest body candle. This is the one that I'm using, but you could use this one up here since this is also where the SMT occurred, or the time that it occurred. We get some displacement through this area. You can see price is too weak to even come back up into this fair value gap at this given time, right? But what do we have as well? If you switch to the 3 minute, we have a high, low, higher high, lower low, right? So this is our breaker. And if you're wondering what this orange box is, this is the opening range gap, and you can get that by turning on regular trading hours, like so. And it's this gap right here. It's the closing price at 614 and then the opening price at 930. And so why I was also hesitant on being bullish is because once you don't want to just see a gap up with no manipulation when you have an opening range gap. If you're truly bullish, you want to see kind of like one of these moves, that Judas swing at 930. And so we had a Judas swing higher into our higher time frame key level, and so that's also why I was uh, bearish as well. So you could see this area, boom, displacement. Where do we bounce? The org's constant encroachment. Now we retrace back up. What do we retrace back into? The inefficient area in price. We wicked that right at 933, so just after our volatility injection at 930. And then what happens? This is a 3 minute unicorn setup. I gotta go back and replay, my bad. A 3 minute unicorn setup here. So I wasn't entirely sure yet, like we just discussed, but I wanted to wait for that clear, most easily noticeable setup. You can also see we got that 3 minute change in the state of delivery if you're waiting for extra confirmation. So this was the perfect entry of the day, but I waited for that to give a reaction. It did exactly what I wanted it to. Institutional order flow entry drilled, respecting the CE of this smaller fair value gap. We also have bearish SMT here because ES is so weak that it couldn't even get into its fair value gap, so that is fair value gap SMT. We displace right through this area, creating what? Another market structure shift at what? Another key area of price, the org CE. Now, if a low is broken with the fair value gap, this should hold if it's a true breakout. So as soon as I saw this, we had some SMT here once again because ES just kept leaking while NQ was giving a bounce. So I was anticipating a deeper retracement in from this swing high to this swing low just because this is the fractal dealing range. And I was waiting for OTE and the CE of this gap. And I was looking at this fair value gap and this up close candle because this high up here should be protected. So this fair value gap should hold us before this fair value gap should hold us if we're going to go lower, at least into where? Into this low, right? And you can definitely frame a profitable setup, and I'll show you guys that here in a second. So I am on a MyFunded Futures starter account. This is my first trade on the after I passed the funded, or after I passed the eval. So the rules are a little different. I would have held until this low if there was no consistency rule, but you can see right here, here's my execution. I sold right here at 74.75, so this is what my RR was looking like. 74.75 right before the CE, and my stop loss was this high because this is also a fractal breaker in my head. And I also didn't want to see really price dig up into the 50% of this order block, and you can see that was right here, so my stop loss was a little above the 50% of this order block. So that's my fill, and I literally took profit at like the low of this candle. It's like 35 points. I made like $700 today. But I would have held, you can see this would have been a 2-hour trade if I would have held for this low. But I didn't want to have that big of a winning day just because of the consistency rule. So I had to tweak my trading a little bit. But you can see our take profit did get hit. And price, if I continue to play price continues to respect this area. All of bullish order flow is being respected. And we just continue to knife right through into what? This is the equilibrium point, and we have our pool of sell side liquidity down there. You can see prices in a hurry, not a lot of deep retracements, and then this is where we get that sell side delivery. But pretty much caught the high. Besides this is the best trade entry other than the turtle soup up here, but I don't trade that. This is my exact trade thesis and idea, but I also want to go into the higher time frame to help understand why you're able to trust this lower time frame setup after a big bullish move like this, right? So if we go to the hourly, I'm actually going to get rid of all this. Actually, I'm not going to get rid of everything, but you can see that we have this Tuesday high up here, right? So price failed to take the 8 a.m. high, leaving the failure swing at Tuesday, which we already talked about. So 2 pools of liquidity, that's very important. When you have a high probability area of a reversal, you want 2 pools of timed liquidity to be taken. This is an important high because it's a Tuesday high specifically. So now we have this hourly candle at 9 a.m. which closes. But more importantly, it's an open high, low close into what? Our key level, which is that 30-minute fair value gap. And we're in what? We're in a deep premium because we're above midnight with 2 pools of important areas of liquidity. So you can see now what do we get? We get a closure below both of these last up close candles. That's your bearish change in the state of delivery. Now these two up close candles are now your order block. So when you have a big candle like this, a big wick like this, you want to be focusing on the 50% of it. And you can be focusing on the consecutive series of the 2 candles, the opening price, which is right here marked out. And you can see here at 10 a.m., what do we get? Open high candle into what? The candle opening. And then what do we get? We get 10 a.m. distribution, the start of a new 4-hour candle. So if you guys are anticipating an expansion, you want to get inside of the wick, and you want to get in as soon as possible because price is going to start spooling towards the dole as soon as a new hourly or 4-hour candle is being opened. So if you're getting to the end of a new candle, you can see right here, this is 10 a.m. this is 10 a.m. close. you can see what we get a manipulation at 10:04, and then what happens afterwards. You can see if you don't get in pretty early, that price is going to continue to expand towards its draw. So that's something for you guys to study, but that's all the framework, right? Two pools of liquidity being ran, two important areas, having a potential area for a reversal, the framework behind it, letting PD arrays be respected first before you enter where you're most comfortable at. Just speaking for myself, this was my most comfortable entry, but just taking profit at lowest hanging fruit, right? When there's a lot of volatility, you guys can make a lot of money very quickly. So I hope this video helped you guys, and I'll see you guys in the next one.